I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California. If you think about the constituents that are benefiting from what we do every day as a team, it's a very rewarding job.
The largest public pension fund in America is run by a Canadian investor. Nicole Musicco is the Chief Investment Officer at the $460 billion California Public Employees Retirement System, or CalPERS.
I got this call, and the call was about the opportunity to come and be the Chief Investment Officer of the U.S.'s largest pension plan. And to be honest, at first I thought, well, that sounds like a crazy idea. Why would I do that?
Musicco did have a background in pensions. She spent 16 years running private investments at the Ontario Teachers Pension Plan. But by the time she got the call from CalPERS, she had left for private equity and was a partner at the sports, entertainment, and media-focused firm Redbird. And returning to the world of public pensions wasn't exactly the plan.
I said, you know, this is a really cool opportunity for me to be able to kind of take my personality and the 16 years of experience I had had in the Canadian pension system and really try to apply those tools to the U.S. system to really make a difference.
Musicco took over in February 2022 in the beginning of the worst year for the stock market since 2008. Under her leadership, CalPERS boosted its allocation of investments in private equity and credit.
The attraction to the Canadian system was the fact that I had, within the Canadian system, so much private market experience.
In fiscal 2023, CalPERS notched a 5.8% gain, much better than the loss in fiscal 2022, but still below the fund's 6.8% target. The average person who does not live in California, what is CalPERS?
Well, CalPERS is the U.S.'s largest pension plan. It stands for the California Public Employee Retirement System. And so we invest the pension money of 2 million members across the California, and we often say we serve the people who serve California.
Okay, so there are 2 million people who are members of CalPERS now. These are people who have been employees of the California State Employment System, or they are currently employees?
It's a mix of both. So we have around 775,000, don't quote me on that number, but pretty close to that, of retirees. And we have just over 800,000 active members.
Okay, so if you work for the California state government, you don't get Social Security, you get this, is that right? Or you get both?
You get both.
Or you get your Social Security and you get the retirement system benefits of CalPERS.
Correct. And you also get health benefits. So in 1932, CalPERS was formed through the legislature. And then in 1962, CalPERS was then given permission, again through the legislature, to issue health insurance.
Okay, so let's suppose you work for California state government entity for 25 years. You retire. What do you get as your benefit from CalPERS? You get a certain percentage of your salary, or do you get whatever you can get them in good rates of return?
It's a mixture of years of service, and then there's a formula. Years of service times a certain percentage depending on which of the groups, which of the members you are a part of. But essentially it is a very it's a very healthy pension to allow you to have retirement with dignity, is what we like to think.
The average person who works at CalPERS, at what age do they retire?
You can retire, I believe, as early as 52 for some of the members who were members prior to, I think it was 2016, and 55 thereafter.
And CalPERS is the nation's biggest state pension fund, is that correct?
It is, correct.
How big is it?
We are at around $465 billion today.
$465 billion.
Correct.
Now your job is to oversee the investment of $465 billion.
Yes, it is.
Do you actually have the money you need to service the obligations you have? Because many of the state pension funds are not really sufficiently, I would say, capitalized at this point.
We're still in around the 72, 73% funded status. It depends, you know, we obviously keep track of this all the time. I think we hit a peak of 80% pre-COVID. We're down to around 72% funded. But again, we think through, you know, through the next 20 years, and that's why we have our 6.8% target, so that we can be fully funded in the 20-year period.
So fully funded means that every dollar you owe somebody, theoretically, you have a dollar to cover them, but no pension fund, or very few in the United States actually, are fully funded?
Very few in the United States. In Canada, it is different. They are mainly fully funded in Canada.
Well, let's talk about Canada, because
Sure.
it's a country you know pretty well.
Yes.
So where were you born?
I was born in Toronto, and I grew up in southwestern Ontario predominantly.
And when you were growing up in Toronto, did you say, I want to run CalPERS someday?
No, I did not. I think from the time I was 2 or 3, my mom said I wanted to be a doctor. And so when I went into university, I went in and studied kinesiology, thinking I was going to do sports medicine. In my 3rd year, thinking I still wanted to do medicine, I had an anatomy course and I had my own cadaver for the year. And let's just leave it as, once I had to work with a cadaver, I quickly realized I was not cut out for working on broken bones or medicine. And so I pivoted.
All right, so you went to undergraduate business school and
I
you
did.
got a degree. Does that take 1 or 2 years?
That was a 2-year program. So I ended up spending 6 years in undergrad.
You got 2 degrees. So when you have your business degree, what did you decide to do then?
My first job out of undergrad was working, well, it was then Solomon Smith Barney and then Citigroup by the time I left.
Did you ever, say, I want to stay here and become CEO or something like that?
I actually really enjoyed the experience working in investment banking. I had a summer job prior to my investment banking role where I worked on a trading floor at Ontario Teachers, and where I ended up being later employed, and I'll come back to that. But they had this really neat rotation program where we got a glimpse into what the different groups or the different asset classes. And that was my first introduction to private equity. And so I enjoyed investment banking, but having the opportunity to see what private equity was about, I really set my sights on getting into private equity after grad school.
Okay. So you were living in New York when you were doing this for Solomon?
I lived in
Smith Barney?
Toronto and New York. I did a stint in both places.
And so you had enough of New York, you moved back to Canada?
I did. I moved back to Canada to get my MBA. And once I graduated from Western's MBA program, that's when I joined Ontario Teachers.
Okay, so
Pension
Ontario
fund.
Teachers is another big pension fund
It is.
based in the Toronto, Ontario area.
Correct.
And represents all the teachers, presumably.
Mm-hmm.
So what area did you specialize in?
I went right into the private equity group and spent 15 years on the private equity side, and then I ran the public equity side of Ontario Teachers. I spent, within that period of time, I spent 1.5 years, 2 years in Hong Kong. I opened the Asia office for Ontario Teachers and then came back to Toronto to run public equities.
In the investment world, nobody spends 15 years in anything, so
I know.
You must have really loved the job.
I did. So I was hired onto the direct investing team, and right out of the gate, we set out to really create a direct investing program, and that's
Now,
kind of what's referred to as the Canadian model now.
For those who aren't familiar with Ontario Teachers, it was a leader in actually doing deals directly.
Correct.
And so, unfortunately, you're saying, you private equity people, we can do the same thing you do. We don't need you. We'll do it ourselves. Was that nice to the private equity people to show them that you could do the same thing?
Philosophically, we didn't go that far. We basically said, we want to do direct investments, but we want to have a smart friend beside us. And so most of the deals, and certainly the best performing deals when we went and did kind of a look back after 10 years, were really with our GP friends. And so while we may not be paying a fee and carry on the direct deal itself, we often had another smart friend at the table.
Okay, so after 15 years of that, you said, I want to be on the other side. I want to actually be a private equity investor in a private equity firm. Is that right?
Yes, that is, yeah.
And what firm did you join?
Redbird Capital Partners.
Now, Redbird was started by Jerry Cardinal,
Correct.
who was a former Goldman partner.
That's right.
And it specializes, I think, in entertainment, sports, media, among other things.
Correct.
All right, so why, after 2 years, did you decide to leave?
Well, I got this call, and the call was about the opportunity to come and be the chief investment officer of the US's largest pension plan. And to be honest, at first I thought, well, that sounds like a crazy idea. Why would I do that? And I said, this is a really cool opportunity for me to be able to kind of take my personality and the 16 years of experience I had had in the Canadian pension system and really try to apply those tools to the US system to really make a difference.
But in the private equity world, you get a carried interest,
Yes.
you get nice compensation.
Yes.
Generally, people go from the public pension fund world to the private equity world. They don't go back because sometimes the compensation is less.
Oh, it's definitely less.
Why did you want to take less compensation? Is it that you like California that much, you wanted to help California, or you just thought it was just a big platform?
I just thought where I am in my career, I'm still in my 40s. I have lots of time to get back into private equity, which I'm sure ultimately that's where I'll go back to. But I thought to be able to commit, I said to the board, up to 5 years of my time to really try to transform U.S. pension felt like a very, intellectually challenging and a good thing to do with the tools that I have.
So the United States has a lot of very talented investment professionals. Why do you think they needed to go to Canada to get somebody to run the pension fund of CalPERS? Did anybody ever say to you, hey, you're a Canadian and we're an American fund, or nobody
cared about that? What do you know
about
that? Yeah. No, I think people did care. I think the attraction to the Canadian system was the fact that I had, within the Canadian system, so much private market experience. And if you think about where CalPERS is or was specifically, private markets is still not a huge part of our strategic asset allocation. And so what I really brought was a bit of a different angle where I could really bolster the private market investing.
So when you go to a cocktail party and say you're the chief investment officer of CalPERS, what's the normal reaction?
Are you crazy? In the last 5 years, we're just below the 6.8. But over 20 years, as long-term patient investors, we're targeting a 6.8% return.
Pensions have come a long way from their beginnings in the Roman Empire in 13 BC. Back then, Roman soldiers with 25 years of service received a lump sum worth about 13 times an annual salary. Fast forward to the 19th century, big American cities like New York began offering payments to police officers and firefighters after getting injured on the job. And in 1911, the Commonwealth of Massachusetts became the first state to offer a pension plan for general state employees. The federal government followed soon thereafter with the Civil Service Retirement Act of 1920, and by the middle of the century, public pensions were commonplace. Today, the largest public pension in the U.S. is the California Public Employees Retirement System, or CalPERS, with more than $400 billion. But pension plans throughout the country were hard hit in 2022 as the combination of inflation and high interest rates battered market returns. CalPERS alone lost nearly $30 billion in the downturn. Now, in the search for higher returns, U.S. pensions are looking beyond public equities and fixed income by boosting their positions in alternatives like private equity, hedge funds, and real estate. By the end of last year, public pensions invested a record $1.6 trillion in alternative assets. Today, CalPERS tries to get what kind of rate of return? In other words, it's obviously a difficult investment environment, but if you've got $400+ billion to invest, what kind of rate of return are you trying to get overall on that amount of money?
So we look at a 20-year rate of return of 6.8%, so that is our current target. And I'd say over the last 20 years, we've been able to hit that. The last 10 years, we've also been able to exceed that. In the last 5 years, we're just below the 6.8. But over 20 years, as long-term patient investors, we're targeting a 6.8% return.
So if you have this much money as you have, this staggering amount of money, why not just buy U.S. Treasury bills with long durations? You'll get a 5% yield, and just isn't 5% enough?
It's not. Unfortunately, it's not. We really do need to hit close to that 7% to stay funded and to be able to meet our commitments.
If I'm a retiree at CalPERS, should I worry that you're only 80% or so funded, or should I not worry because you're really likely to be able to pay off your pension to me?
Yeah, I don't think you should worry. I think the reason we've set up and have started to introduce things like private market asset classes, the portfolio is extremely diversified. Managing to a 6.8% return will get us to a funded status.
Today, we've obviously had inflation that's pretty high in the United States for the last couple of years. Obviously had it in Canada as well and around the Western world. Does that make it harder to invest and get the rate of return you want if inflation is relatively high?
Sure it does. I mean, it's obvious inflation is having an impact across the portfolio. We have to be mindful of what the knock-on effects are going to be within the different asset classes, for example. And so it's fair to say right now we're thinking a little bit harder and a little differently maybe about infrastructure as an asset class, for example, because of the inflation protection that it can provide. And so inflation absolutely has an impact on our portfolio, as does the interest rate environment, which is clearly change the cost of capital across all the asset classes.
Let's talk about the interest rate environment.
Sure.
Do you sit there in Sacramento and say interest rates are going to go up again? Do you try to make projections of what the Fed's going to do in advance, or do you wait till they make the decision and then you react to it?
We really try to have discipline around being long-term investors and think about our strategic asset allocation as our North Star. And so rather than trying to time the market, we're certainly mindful and we think about where interest rates are, but we're not trying to time the market.
So the United States has had some challenges recently, high inflation, so forth, high interest rates. But what about outside the United States? Does CalPERS invest outside the United States? And if it does, is that controversial because your employees are all in California? Are they saying ever, look, let's invest our money in our country? Do they ever say that? And if not, and you're allowed to invest outside, what areas do you like outside or countries?
So we do invest outside of the U.S., but we are close to 80% invested in the U.S. So I'll start with that. We do have investment in California, and we track that. We make sure we really understand where we're putting the capital to work in California, but even on a relative basis, that's quite small, probably about 10% of our portfolio. We have certain areas where we are really getting pushback on investing right now, and China would be one of those areas, and so we've got less than 3% invested in China. Areas like some of the emerging markets we're starting to think more about. We probably have about an 11% exposure to emerging markets, and we're a bit hesitant on Europe right now. We're kind of holding back on putting more capital to work in Europe.
But do you get political pressure to not invest in China?
We do.
And the money you've already got there, are you going to try to take it out right away, or just say, look, it would be foolhardy to take it out right away. It'll come out when it comes out?
We're being mindful about our exposure in China right now so that we can avoid having any big losses if we were to be told overnight to divest of China.
So in the large endowment world that you're in, the pension fund world, there are two ways of doing things, I guess. One is you bring all the investment professionals in-house, you buy the stocks yourself, you do the deals yourself, as you did at Ontario Teachers to some extent, or you outsource it, you have money managers doing most of that. And what is the style that you use at CalPERS?
It varies across the asset classes. Our fixed income program is predominantly in-house. We don't have fundamental portfolio managers, but some of the execution is done in-house on the public equity side. On the private market side, it's generally all managers. Private equity, infrastructure, real estate, we're partnering with general partners, GPs, to invest on our behalf.
Recent years, there's been a big concern about ESG. ESG is kind of an acronym for worrying about environmental and social and governance issues. What is your view on ESG? Are you the school that says it's been oversold, it's not as important as it should be, or you think it's not getting enough attention?
We have spent a great deal of time trying to really move the needle on climate solutions. We kind of think of ESG in two different ways. ESG as a framework for investing, so almost think about it through the risk lens, and ESG through the investing lens, and trying to think about how can we invest more sustainably, whether that's into more diverse managers, as the example I used, or into climate solutions, for example.
So there's been a backlash against ESG in some circles, political and other circles. Do you feel that backlash at CalPERS, or you're not worried about the backlash against ESG?
We think about it all the time. I mean, we have different pressures. So we're really trying to keep the politics of ESG out of our boardroom and out of our investment decision making. And we really believe in engagement. We think if we have a voice at the table, that we can be a lot more productive in helping the overall climate problem rather than just focusing on our own portfolio.
Are you worried about real estate in the United States? You're a gigantic real estate investor, and real estate in office buildings in big cities like Sacramento, Los Angeles, New York, they have some struggles because people are not coming to the office that much, and therefore the landlords are probably not going to have tenants renew with the same amount of space that they once leased. What do you think about that concern?
Yeah, I think real estate is a very broad space to invest in, and so there's multiple sectors within real estate, and so certainly the office space sector that you're referring to is one that we've been really digging into to see what our exposure is. We're very well diversified across a number of different sectors within real estate, but certainly within office buildings, if they're not the Class A office buildings, there probably is going to be some real pain to be felt still as we're starting to adjust to where interest rates are.
Let's talk about AI for a moment. There are two aspects of it I'd like to ask you about.
Sure.
One is, as an area in which to invest, there seems to be a gold rush into AI. Everybody thinks AI is changing life as we know it. Do you think there are great investment opportunities there, or is it too early to know?
For a large pension like us that doesn't have the in-house deep expertise, it's too early for us to know specifically. We're taking a different path. We're doing a whole refresh on our own technology system, and we're bringing in outside help to help us make sure we're set up to succeed in a world that is going to be absolutely touched by AI. So our investment systems, all the technology that our investing program resides on, we're taking a look at. I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
You've been a woman in the investment world for quite some time. Do you feel that it's getting better to be a woman, easier than it was when you first started, or do you think it's still challenging to be a woman and rise up as you have in the investment world?
I think the area that I'm most focused on right now is educating young women about what the industry is and the possibilities. There's so much breadth. There's so many opportunities, whether you're talking about working in a pension plan like I started my career, or working as a GP and everything in between. And so I think there's been a real push, and I've seen great momentum in educating young women to come up into the organizations. There's always going to be a bit of a glut in the middle of one's career if you're thinking about women that go through perhaps having a family, et cetera. And so when we look at our own diversity numbers, we always see, unfortunately, a bit of a glut in that middle career part. But we're also starting to see more and more women coming back into the industry.
Do you have any hobbies? Do you have any things you're really passionate about outside work?
My son and I have become avid Sacramento Kings fans, for example. We were seasons ticket holders and didn't miss a game. Well, didn't miss many games anyway this past season. But outside, I mean, California, living in Sacramento, we have access to Lake Tahoe. We love to ski. I love cycling. I love running. And so it's a wonderful place to live if you like outdoor adventures.
Would you recommend this job to somebody in the future? You're going to do it for X number of years, but you think this is a good job to be the Chief Investment Officer of CalPERS?
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California. I mean, if you think about the constituents that are benefiting from what we do every day as a team, it's a very rewarding job.
What is the best investment advice you ever received?
I guess just not to try to time the market, to be a patient investor that has a well-diversified portfolio.
For the average investor, what do you think the biggest mistake the average investor makes? Is it getting out of the market too soon or coming in too soon? What is the biggest mistake the average investor makes in your view?
In my view, I think we certainly see it a lot in recent years, is this FOMO, the fear of missing out. And so jumping on a bandwagon, which is probably way too late, coming into the market, into ideas that you have FOMO over, that you're seeing others have made money on.
So if you're at a cocktail party and somebody says, look, I'm not an investment professional, I know you can't give advice that much, but I have $100,000, it's burning a hole in my pocket. What should I do with $100,000? I need to not lose it, but I can take some risk. What would you tell somebody to do with $100,000?
That is the specific question that I cannot answer.
Can't answer that question. Okay.
I'm sorry, David.
You can't give advice on anything?
No, I can't.
Oh, okay. So I guess I'm not getting free investment advice for you.
You're not today.
Okay. When you're investing your own money, do you invest it yourself, or do you have outside managers managing your money?
I invest my own money myself, and I'm, obviously, having been a private equity partner for some time, I have a real affinity to more private market investing. Given the industry I've been in, I have lots of exposure to public markets, but I spend a great deal of time thinking about where the opportunities are on the private market side.
Do you agree with my view that private equity is the highest calling of mankind?
I love private equity. I do.